Today, we're going to talk about a massive, silent transfer of wealth. You see, while the general public is piling into the stock market like never before, a very small group of financial insiders and central banks, well, they're making a completely different bet. We're going to follow the money and see what they might know that the rest of us don't.
So let's just dive right in with a big question. What if all the chaos we're seeing in the markets, the sudden price drops, the volatility, what if it wasn't just random noise? What if it was actually a series of calculated moves, a playbook being run in plain sight, if you just know where to look? Here's how we're going to unpack this. First, we'll look at some really strange signals coming out of the precious metals market. Then, we'll pull back the curtain to see who's behind it all and why. We'll zoom out to get the big picture, compare their assets of choice, and then get to the main event, the great divergence between their strategy and the public's, and what that means for the endgame. All right, so let's start with the anomalies, the weird things that the mainstream financial news seems to be totally ignoring. These aren't just little market quirks. These are more like stress fractures appearing in the very foundation of the financial system. Okay, let's break down what we're actually seeing here because this stuff is really important. First off, look at the timing of these massive sales. Insiders are dumping billions in gold and silver contracts, not during peak trading hours, but in the dead of night, in what's called an illiquid market. Now, you don't do that to get a good price. You do that to cause maximum damage to the price. It's a tactic to artificially smash prices down. And then, look at the COMEX exchange. That's where gold futures are traded, basically promises to deliver gold later. Historically, less than 1% of these contracts ever end with someone asking for the actual physical metal. But now, we're seeing an unheard of 100% of contracts demanding physical delivery. That means everyone is saying, forget the paper promise, I want the real gold bars. And that led to a staggering $7 billion worth of physical gold being demanded in just 3 days. That's a huge sign that trust in the paper market is just collapsing.
So the big question is, who is making these super unusual price-crushing moves and then turning right around and demanding the physical metal? Well, it's not some rogue trader. The footprints point directly to the heart of Wall Street and the world's central banks. So you have two completely different stories being told. On the left is the story the public gets from the news. Oh, it's just a healthy, normal price correction. But on the right, the data shows what's really going on. A deliberate price smash, like an ambush, designed to shake out the weak hands before the insiders rush in to buy everything at a discount. It's a classic bait and switch. And this is where it gets really incredible. The very institutions telling the public one thing are secretly doing the exact opposite. Market data shows footprints of Bank of America and Morgan Stanley just sweeping up thousands of these cheap gold contracts for physical delivery. And at the exact same time, their top analysts are telling their biggest clients to hold up to 25% of their portfolios in gold. Meanwhile, central banks around the world are buying physical gold at a record pace. They are all doing the complete opposite of what the public is being encouraged to do. So, why are they making these moves right now? I mean, what's the big rush? To understand the motive, we have to zoom out from the daily market charts and look at the massive geopolitical shifts happening on the world stage. Because these moves, they're not happening in a vacuum. Analyst Grant Williams suggests we are deep in a phase called the fourth turning. Think of it as a historical cycle, a period of reckoning, where old systems break down to make way for new ones. It's a time of huge social and political stress, where trust in institutions, governments, central banks just erodes. And during these times, the very nature of money and power gets redefined. This is the backdrop for the insiders' move into hard, physical assets. And the catalyst, the thing that really kicked all this into high gear, was when the U.S. froze Russia's dollar assets in 2022. That single move was a global wake-up call. It sent a clear message to every country on Earth. Your dollar reserves are only safe as long as you stay on the right side of U.S. politics. Almost overnight, every central bank in the world was forced to create a Plan B to protect their wealth. And their number one choice was neutral, physical gold, an asset no single country can freeze or devalue. And this is just the perfect analogy for the move away from the dollar. It's not some big, loud event. It's a slow, quiet process, like termites eating away at the foundations of a house. From the street, the house looks totally fine. But bit by bit, the structural damage is being done. And one day, that damage becomes catastrophic. So we know the insiders are moving into hard assets. But it's fascinating to see how gold and silver are playing two very different roles in their strategy. They appeal to completely different mindsets. Yeah, think of it this way. Gold is the shield. It's the defensive play for preserving wealth. It's what central banks and huge, cautious institutions buy. Silver, on the other hand, that's the sword. It's the offensive play, the one that attracts a new generation of risk takers with its history of wild price swings and potential for insane speculation. You know, there's a great story from the US Civil War that perfectly illustrates the real strategy behind holding gold. It's not about getting rich quick, it's about not becoming poor. The key takeaway here is just so powerful. He preserved his wealth by holding a real asset outside of the collapsing currency systems. While everyone else's paper money turned to dust, his purchasing power was completely safe. That is the core function of gold in a chaotic world. It's not about getting richer, it's about holding your ground while everyone around you gets wiped out. Silver, though, is a totally different ballgame. It's poised to become the next huge speculative play. It's expected to attract that same high-risk, high-reward capital. The money that chased meme stocks and crypto will likely flood into the much, much smaller silver market, looking for the kind of explosive moves that silver is famous for. And this brings us right to the heart of our explainer today, this stark, undeniable contrast between what the insiders are doing and where the public is placing its bets. The data reveals two completely different strategies playing out in real time. So let's look at the public first. They are more exposed to the stock market than ever before, using over $1 trillion in what's called margin debt. That's money they've borrowed from a broker to buy even more stocks. It is an incredibly risky, all-or-nothing bet that the market can only go up. It's a level of speculation we've never seen before. Now, here's the other side of that exact same trade. As the public is borrowing money to go all in, corporate insiders, the people who actually run these companies, are cashing out at record levels. They are selling billions of dollars worth of their own company stock every single week. They're the sellers, and the public are the buyers. And this chart just shows the complete disconnect. Despite all the global turmoil and the warning signs we've talked about, the public's allocation to real assets, like commodities and precious metals, is basically zero, less than 0.5%. The herd is almost entirely packed into paper assets, completely ignoring the one thing that insiders are quietly buying up. So how do you process this massive divergence in strategy? Well, the sources offer a pretty clear perspective on navigating what comes next, and it's all about shifting from accumulation to preservation. This quote really nails the mood right now. The environment has shifted. It's gone from offense to defense. After years of bull markets where taking huge risks paid off, the main goal now is just survival, protecting the wealth you've already built. The pain of losing what you have is so much greater than the joy of any gains you might have missed. What this all boils down to is distinguishing between the noise of the day-to-day paper price swings, which we've seen is easily manipulated, and the signal of quiet, relentless physical accumulation by the world's most informed players. The noise is designed to confuse you. The signal is what they are actually doing with their own money. And that leaves us with one final question. The data shows two completely different roads being taken. One is paved with borrowed money and paper assets, and it's being followed by the public. The other is a quieter path toward physical, real assets, taken by those closest to the information. Thank you for joining us on The Explainer.